Hey traders, Raghee here. Welcome to Charts and Coffee for Non-Farm Payroll Friday. Hope everyone is doing great. We've got some interesting volatility going on. And what I've got up on the screen right now is the 5-minute time frame. And I'm looking at the volatility in terms of historical hourly price movement range expectations. In other words, there's a typical number of points that the market moves at this time anyways, right? On a Friday between 8 and 9 a.m. And so I'm just looking to see how non-farm payroll is behaving in terms of those sort of lines in the road that we already have. So yeah, a lot of volatility as we would expect, but not a whole heck of a lot of speed. In other words, we've got some. Well, I should say we don't have a lot of direction, right? So what we want to remember is the S&P and Nas won't always behave in the same way. In fact, the Nasdaq was up a little bit right after non-farm payroll, and they both have rolled over a little bit since. So it was a pretty big miss. You've got to wonder why something as big a miss as this would not generally be pretty bullish to the market. I'm expecting that reaction. So let's see. This is not the kind of data that the Federal Reserve would stand upon to say, look, we're going to start taper. We're going to do it sooner. We're going to do it bolder. We're going to do it quicker. That's not definitely the response here. So that's what we've got to kick off this Friday going into a long weekend. So happy Friday, everybody. And let's get to your questions. All right, let's do it. And all right, how is FOX looking? All right, let's jump in. Let's take a look. We'll jump over to the daily time frames there. So this is consolidating. FOX, right? This is consolidating. Maybe a breakout through the Darvis. We've got this Darvis level sitting at about 34.80 and change, 34.90. Maybe a breakthrough 35 where you can see there's a little bit of a volume ledge sitting at about 35.03. So this would be a little bit more of a momentum type entry, or you can choose to front run the momentum with an entry closer to say 34.10. Non-trending market won't be at the top of my list, but interesting consolidation, just waiting for a potential break. Maybe not necessarily something that I would assume would be to the upside, because it could be potentially a continuation lower, but we'll see how that pans out. So thanks for the question. All right, just bear with me one moment here on my layout. Just give me one sec here, because something is not visible that I would like on. There we go. V-score. There we go. I was wondering where that went. Okay. So let's use this window here. Okay. There we go. All right. So jumping into, all right, just out of curiosity, what writing tool do I use to make my presentation? Donald, writing tool, do you mean the workflowy on the left side, my list of notes, or just whatever I go all John Madden on the screen? Wasn't sure. I use workflowy for note-taking. Probably many of you probably seen me use this. And then I've been using a software called Camtasia for well over 20 years to notate the screen, to capture screens, etc. So that's what I've been using. So I hope that helps. I'm a big fan of you all even taking screen captures and notating them for your own study later on. I mean, nothing is going to be as useful as a snapshot of the chart before you take the trade, in the midst of the trade, and when you exit the trade. I mean, yes, I love trading journals, but sometimes way too much is made of that. I like the visual of a screen capture of pre, during, and post a trade. And I've got actually thousands and thousands and thousands of screen captures from the trades that I've taken over the years. And they tell me a lot about, what I was seeing, what I might have been missing. Because remember, a journal can only note what you know to note, right? Whatever you're capable of recognizing, that's all the journal can, your own journal can tell you. But if you take a screen capture and you go back and look at that screen capture 6 months, 1 year later, you're gonna realize, wow, there weren't things that my eyes were trained to that they are now. So big fan of screen capturing. Thanks for the question. Rick, good morning. NAVI. You got it. All right. Beautiful uptrend. Beautiful uptrend. That's fantastic. And propulsion dots are lit up. So that means the 21 EMA. Now, look, is the 21 EMA always a viable pullback? Using simpler propulsion, I would say no, because unless the dots are there, you'll see the green dots on the screen. Unless the dots are there, there's nothing to react to. That's why I like the way in which simpler propulsion is sort of a self-correcting, smart, if you will, EMA. And so what we have then is maybe a 21, definitely something at the VWAP and the top line of the wave, the 34. So I would keep an eye on that area between the 21 and around 2183. So the 21 exponential around 2215 and then 2184 for a pullback buy. Really nice look at that market. Now we're coming up into next dividend date. I like a little bit of a sell-off after that date. So that could be enough of a catalyst to maybe start closing the distance. So definitely a pullback buy. Gorgeous double green uptrend. Antonio, can I share with us my thoughts on XLP and PEP for building long positions? All right. Well, XLP, Antonio, I'm already long. So now do I have, so we can be bullish, right? We can have an overall bullish bias. We can know that the environment is going to be friendly to long positions. But that doesn't mean that I have something that I can do here, right? That does not mean that there's something in today's candle that I can do. In fact, the zone for us was down in here. And that's where we got long. We got long XLP, hit the first target. I am looking for the market to continue to new highs. But in the meanwhile, right, in terms of a long position, I'm with you 100%. I just can't do anything now. So I need another pullback, much like what we saw back in here. Wait for some blue grab candles like the last time. Wait for some blue grab candles, and we could see a really nice pullback. Now, PEP is a stock within XLP. So if I don't like the sector, I'm really going to be pretty tough on the stock. So I like this sector, and I just went with the tide and not an individual boat. But if I don't like the sector, I have to have one heck of a relative outperforming individual boat, aka stock, that I would be willing to get into. So right now, XLP and PEP are sort of the same thing. There's PEP exposure in XLP. Same thing with Coke and a number of other names. So with that in mind, please remember that if you've got XLP exposure, you've got to have a really good reason as to why PEP is worth adding to your book of trades. So I like PEP, but not as much as XLP, because XLP allows us to take advantage of the broader look at staples. So I hope that helps. All right, moving on. What do I use for volume? So I have two sort of volume-based tools. One is the volume bar here, and then I think you're probably referring to this. That's just volume profile. That's a volume profile. And you can find it on TradingView. I like the volume profile on TradingView very, very much. Yes. So, and when it comes to volume profile, there's some nuance as to what to do with volume ledges, but they're really simple to use. You just have to understand look back comparisons. But yeah, you can activate that right on TradingView to look up the volume profile. Next up, Andres asks, good morning. Good morning, Andres. I'm looking at the CL. Oh, gosh, yes. Crude oil continues to be strengthening. Nothing that I'm wild about doing on crude oil yet because it's not a trend. Soon, hopefully, coming out of that consolidation, looking to move up post-Hurricane Ida. RBOB took it on the chin a little bit more, gasoline. But I do like CL. They look very similar. Well, they might look really similar, but I'm not looking at them from the same, viewpoint. And I don't know that I actually think RTY is better. They're both chop. I agree with you. Their similarity is in chop, and then the similarity ends there. So I agree. They're both in chop. RTY is, and if you've been following along with the uh, free videos over at the Simpler Trading YouTube channel, you know that we've been focusing on this area for a long position. There is no short for me in chop when the trend that preceded the chop was up, as it was in the Russell. So these oversold buys are exactly where we want to be, looking for that movement higher. And then now we're getting up towards where we could potentially be overbought. There is resistance coming up in the RTY. And let me show you what that looks like. There you go, right? I mean, look at that. Chopping all year long. And now we're heading up to the top of the range. So it's a really nice looking distribution market, and the trend that preceded this distribution was so clear. The oversold buys are just a no-brainer, aren't they, when you really step back and look at it? So love that. And just how am I managing the upside expectations? Well, take a look at how many times recently we've exhausted around the +2 standard deviation on the V-score, getting closer and closer, but we're not there yet. So this is not that dissimilar in terms of use of the V-score to natural gas. A lot of folks said, wow, natural gas has really been so strong. And my thinking is, hey, we could hit the third standard deviation of the V-score before I've really got to be concerned about a more pronounced pullback or even potential reversal or transition to chop. So, and I'll use that a lot. And we'll talk a lot more about the V-score and how I use it in terms of what it's telling me as we go into live trading on September 10 and 13. We have 2 sessions coming up next Friday, so a week from today. If you haven't checked that out yet, well, if you're already getting the Countdown Trader updates sent to your inbox, cool. Then you're probably already aware of the live trading sessions. And oh yeah, they include my indicators. So you can check that out at Raghee Workspace Bundle. All right, if you haven't already. So yeah, that RTY is really now more in trade management mode, my friend. I won't be entering. And I don't want to short. I don't want to short. So even when it gets to the upper end of the range, I won't be that interested in the short. But that long's been a very good trade. And if you're not aware of what I've been doing with the Russell, check out the videos over at the Simpler Trading YouTube channel. We have 4 videos that walk through exactly what I was looking at on the day of the entry and then subsequent in terms of management. So if you want a really good look at what got us in, I mean, look at the V-score here. Boop. Look at that. Not a double bottom in price. It's a really nice, almost perfect double bottom on the V-score. And so you can check out all those videos there. Thanks for the question. Is it time to get back into bonds? Hey there, Melissa. ZB. I do like the look on bonds. I do. Yes, down near, take a look, down near the Darvis. See that right there? About 162 on ZB. Now remember, ZB looks a little weird because we've got these gaps on the chart, and the gaps are because we've rolled from one contract to the next. And usually these gaps like to be closed. So there's that potential catalyst for movement to the upside for the gap close. And then the other is the trend that is up. And if there is probability of a continuation after this choppiness, lower end of the range, look for the buy. It's a low risk entry, not because it's a high probability, because probability and risk, yeah, I guess you could say they're somewhat related, but probability means I think the markets are going to do this, therefore I'm so confident about it, it's low risk. That's actually not really sound risk management thinking. What you want us to do, and where I love your timing of the question, Melissa, is we're so close to the lows, we're going to know really quickly. If we don't hold 162, we're out. So risk, one of the easiest ways to have a defined risk and a low risk is, yes, having a good setup and strategy and indicators for the environment that we're in, and my directional bias is still bullish. but also being really close to the point of validity. When your entry is close to the point of validity, your risk is inherently lower. So I like the timing of the question. I like the zone. Just remember, we're going into a 4-day weekend, so I don't know that I'd be so keen on actually hopping in with ZB bond futures, but TLT and an aggro size position could very well be merited. And I'll probably talk more about that when I hop into the Sector Secrets room a little bit later on this morning. All right, so moving on to, um, let's see, our next question is Hun. Sure, Honeywell. All right, trend, no. However, trend that was up, kind of slopping around. So what's going to be really important with Honeywell is to ask yourself, if I'm looking at this individual stock, it's a boat, right? The way that I use that analogy. What is the tide for Honeywell? And so it's going to take you right into the XLI. It's going to take you right into the DIA. And this is where Honeywell is 4 or 5% of each one of those ETFs. All right, so then you're going to start going through a relative outperformance type of outlook. Honeywell is the number one weighted stock in the XLI, followed by UNP, followed then by UPS. And XLI has had a difficult time getting out of its own way. So you can see these stocks are meandering. They're trying to move higher because the larger, broader equities picture is bullish. But I don't know that I've got a great relative outperformer. CSX was on my radar for a bit, but clearly it started to lose footing. And so I'll just keep going down the list until I find something that has some good structure. And then likely that would be the candidate for the entry if I can't find something I actually like on the XLI ETF itself. It's a tricky one. Honeywell is going to more or less do what XLI is doing. And XLI is going to pretty much look like, I mean, they almost look identical, don't they? So you've got to like the bigger picture. And maybe Honeywell may not be the best way into XLI, and maybe it will be. But you might say, okay, well, Rog, how do we know if we want to go boat or tide? The more boats you like in this tide, the more it makes sense to go with the tide. So thanks for the question, Charlie. I appreciate it. Moving on to, should we use, AJ, yes, should we use ZB, the 30-year bond futures, for a setup on TLT? Yes. Remember, the reason they look sort of disconnected is not because they are, but because TLT, the 30-year bond or the long bond ETF, is having to wait or even make slight adjustments to the fact that we've rolled from September to December on the futures contracts. So remember, you're going to have this September pricing that is now on a continuous contract being replaced by December pricing. And that creates a contract rollover generated gap. Not a gap because it was an extreme difference in opinion in a single session or at the open. It's not that kind of gap. It's a gap that's created by the contract roll, which is pretty unique to futures, right? So TLT is just sort of having to hold tight and adjust to what's happening there. So that's where the disconnect is coming from. But the longer the December contract now exists as the front month, the one that we're all paying attention to, the one where the open interest is flowing to, the one where the volume is in, TLT will sync up really nice with it, okay? LEN. All right, so LEN is going to be a similar conversation in terms of process, right? We always need that repeating process, and it's going to be a similar conversation to HUN, which is to say, what is LEN weighted within? So LEN takes us over to ITB. And once we're in ITB or XHB, by the way, I mean, ITB has heavier weighting of LEN within it, of Lennar within it. And DHI would be another stock to look at. NBR, Sherwin-Williams, SHW, which, gosh, on pullbacks, SHW looks amazing. LOW, be careful. Home Depot is always tricky. Home Depot, yes, it's got a foot in this ITB world, but it's also got a foot in XLY and DIA. So ITB is not the only influence from the passive investing universe on Home Depot. So be careful when you've got multiple ETFs that could be influential, but SHW is great. And yeah, LEN is fine. But then the bigger question also can be, can we go straight up ITB? Can we go ITB and take advantage of if I like a lot of the boats in the tide, I would be better off going with the tide. So thanks for the question on that one. All right. So that is it for Charts and Coffee. So for those of you that are heading off to the futures room or the options room or any one of the masteries, I will see you all in the Sector Secrets Mastery in a few minutes. I'm going to go top off the coffee. Have a great long weekend, by the way, gang. I say unplug for a bit, just as much for me as it is for you. I'll be tempted to sit down and probably do a Charts and Coffee on Monday. So don't be surprised if we do have one. I'll still be looking at some charts for a little bit in the morning. So I'll probably see you then. Have a terrific weekend. Thanks as always for being part of the Chart and Coffee crew. I got the coolest birthday present. It's not on my desk right now, but I'll show it to you on Monday. It is the Caffeinate and Dominate Coffee Stir. And that is our mantra. Caffeinate and Dominate. So big thanks to Trish for my new favorite birthday present. All right. Have a great one, gang. Have a terrific weekend. Be careful. Non-farm payroll Friday is a caution day. Be good to each other. I'll see you soon.